This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. We'll get to the movements in property values in the past month very shortly. But in the meantime, let's see the interest from buyers around the country over the weekend. That could add to all of that. Nationally, there were just under 1,500 auctions around the place. The clearance rate again was healthy. You can see it here, 61.2%. Now in Sydney, there were 416 auctions. That's fewer than in recent weeks. The clearance rate here was right on 63%, which is pretty good. In Melbourne, there were 583 auctions, again lower than normal. But look at this clearance rate. It was exceptionally strong, close on 72%. In Brisbane, just 90 auctions and a clearance rate of around 38%. In Adelaide, 61 auctions, 77% of those sold. That's almost boom time conditions. Lastly, Canberra, 39 auctions, lower clearance rate here of just over 56%. Let's bring in here to talk about house prices, home prices around the country, Angus Moore, economist with REA Group. Angus, being, the first month, he looks at house price movements around the country. But this shows really that the markets have bottomed out, haven't they? There's no doubt about that.
It does appear to be that way. We've now seen 4 consecutive increases in prices. Not big increases, certainly. Compared to trough over the 4 months, we're up a little under 0.75%, which, look...
But they're not going backwards. That's the important thing.
That's the big change. Compared to what we were seeing last year when the RBA was raising interest rates 50 basis points every meeting, month after month, and prices were falling 1% or more each month. It is a big change.
So we're looking at it here over the month as we go back over a period of time, and also what the various cities are doing, capital cities are doing right now. Melbourne backwards, but it's Sydney that's the important one here, and Adelaide to a certain extent, because Sydney really led the market into its downturn. It's now leading the country out of the downturn as well.
Yeah, that's right. Sydney is our most expensive city, clearly, by quite some margin. One of the kind of key trends that we see during price cycles is more expensive areas tend to go up by more when prices are rising, tend to go down by more when they're falling. That's what we've seen in this kind of part of the cycle. Sydney did lean the downturn. It's now leading, maybe not the upturn, but the stabilisation turn, as it were.
And so the other interesting side of this is other capital cities, just where the movements have been. At one point, Perth, when the mining industry fell apart, was really for a long, long time very much underwater. Darwin was the same way. But now even those cities have stabilised, which has much to do with the mining industry as anything else for those supply and demand factors.
Yeah, certainly Perth has its own kind of cycle going on over the last 15 years driven by the mining investment boom, and it has looked a bit different from some of the other cities across Australia. It has seen prices hold up pretty well through the hiking phase of the RBA over the recent period. In part, that's because they didn't see as strong an increase in prices across the pandemic as we did in, say, Brisbane or Adelaide.
OK, so then one thing that you and I have talked about is the rise in rents. And so this not only perhaps drives some people back into the market to buy because the maths just works out for them, but secondarily, even for investors, the rise in the rents is going to lead at some stage to a rise in the capital value of those assets. That would happen whether it's shares, whether it's property, whether it's bonds, but that's got to be taking place at some stage.
Right, exactly. There's kind of two things there. One, the rental market shows that fundamentally there's very strong demand for Australian housing at the moment. There's very few available properties. Rents are growing really quickly. The rental market is in many ways where the rubber hits the road. The flip side of that is what that means for home prices, which, to date, we haven't seen a lot of that kind of transmission happening. Investor activity has come off from where it was last year, largely because interest rates are up very strongly, though investors are a larger share of housing activity than they were during the pandemic. So some signs that that's happening. Similarly, for first home buyers, rising rents does make it more attractive to move into home ownership, but at least to date, the impact of higher interest rates has been bigger, and we have seen a fall in first home buyer activity thus far.
OK, just a final one. We might do a little bit of work on this into the future, but where is the population that's coming in from overseas? Where is it landing? Where is the population pressure the greatest on the property market right now?
Yeah, so we know from the census that recent migrants to Australia disproportionately live in inner city areas. And, given they are our most populous cities, that is predominantly Sydney and Melbourne, particularly close to major universities. Those are, the kind of silver lining is those were rental markets that were pretty weak during the pandemic. That's largely changed now. Particularly inner city Melbourne, inner city Sydney are now quite tight rental markets. Maybe not as tight as some other parts of those cities, but pretty tight now.